All right, so you want to know if NXP Semiconductors is a buy or not. Well, you've given us a ton of research on NXP. So today, let's take a deep dive into this company and see what we can uncover.
Sounds good to me. NXP is definitely a major player in the tech world these days.
So to kick things off, can you give us a little overview of what NXP actually does?
Yeah, so they make chips, but they're not just any chip maker. They specialize in secure connections for a lot of the tech we use every day.
What kind of tech are we talking about here?
Well, think about cars, smartphones,
Yeah.
factories, even things like smart homes. NXP's chips are basically the brains behind the scenes, making sure that all those systems can talk to each other safely and reliably.
Okay, so not just the chips themselves, but the brains making sure those chips can talk to each other securely.
Yeah.
Yeah, that's pretty crucial in a world where everything's getting connected.
It is, and what's really interesting is how dominant they are in the automotive industry. A full 44% of NXP's revenue comes from car manufacturers.
Wow, 44%.
Yeah.
I knew they were in cars, but that's a huge chunk of their business.
It is, and it makes sense when you think about all the technology that goes into modern cars these days. Everything from advanced driver assistance systems to self-driving features, even just the basic entertainment systems in cars. Chances are there's an NXP chip making it all work seamlessly and securely.
So basically, if we want to understand how well NXP might do in the future, we really need to understand where the whole car industry is going.
I got it. And the future of cars is definitely trending towards electric autonomous and hyper-connected, all trends that rely heavily on advanced semiconductors.
Yeah, that makes sense. Okay, so we've got a good grasp on what NXP does and why their work is important. But what about the people running the show? What can you tell us about NXP's leadership?
Well, Kurt Sievers has been the CEO since 2009, so he's been guiding the company through some major industry changes and some pretty rough economic times, too.
Wow, 2009. That's a pretty long time to be CEO in the tech world, especially with all the ups and downs the industry goes through.
Yeah, and what's interesting about NXP under his leadership is that there's a big focus on ethics and transparency. They actually publish a whole sustainability report every year, outlining their impact on the environment and society.
Huh. That's pretty cool. It seems like a lot of investors are paying more and more attention to that kind of thing. It's not just about profits anymore. It's about values, too.
Exactly. Investors are definitely looking at a company's environmental, social, and governance performance. ESG, they call it. It's a big part of the decision-making process these days.
Okay, so ethical leadership, a focus on sustainability. Sounds promising so far. But let's be real. At the end of the day, it all comes down to the numbers. What's NXP's financial health looking like?
Well, their financials paint a picture of a company that's on pretty solid ground. NXP's market capitalization is somewhere around $53 billion. That puts them among the giants in the semiconductor world.
$53 billion. Wow, they're not messing around.
Nope. And when you look at their price-to-earnings ratio, it's actually a bit lower than the average for the industry,
Yeah.
which could mean that NXP is currently undervalued.
Now, that's the kind of thing that gets value investors excited. Is there anything that might explain why they might be undervalued?
Well, one thing to note is that their revenue growth has dipped a bit recently, probably because of the general economic slowdown that's been happening. But when you look at the long-term picture, their prospects still look pretty strong. After all, they are operating in a high-growth industry, and they have a strong position in some key sectors.
So even though there's been a dip lately, the long-term outlook is still good. Makes sense. What about profitability? Are they actually making money?
Oh, yeah. Their profit margins are very healthy, which tells us that they're managing costs well, and they have some pricing power in the market.
So they're not just bringing in money, they're keeping a good chunk of it, too. That's always a good sign. What about debt? Are they drowning in loans?
No, their debt levels seem pretty manageable, and they've got good credit ratings from the major agencies, so it doesn't look like they're over-leveraged. And they should be able to handle any economic ups and downs that come their way.
So far, so good. NXP seems to have solid leadership, a strong ethical foundation, and their financials look pretty healthy, too. But we've only scratched the surface here. There's still a lot more to uncover about how the market sees NXP and what kinds of risks they might be facing.
Definitely. For example, we haven't even touched on what Wall Street analysts are saying about NXP's future, or whether there are any red flags hiding beneath the surface of those seemingly good financials.
Ooh, that's a good tease. We'll have to dig into all that and more when we come back for part 2 of our deep dive into NXP Semiconductors, so stay tuned.
Welcome back. So we just finished talking about NXP's financials, but now let's see what the rest of the market thinks about them.
Right. Just because a company looks good on paper doesn't mean investors are actually buying their stock. What's the word on the street about NXP?
Well, if you look at Wall Street analysts, The general consensus is a moderate buy rating.
Moderate buy, so not a huge thumbs up, but not a thumbs down either.
Right, it's kind of middle of the road, and it doesn't tell the whole story either.
There's always a but, isn't there?
Yeah. There is. Because even though analysts think NXP has potential, their stock hasn't actually been doing as well as the rest of the tech sector lately. Investors seem a little hesitant.
So Wall Street is lukewarm on NXP. Is it just the economy making everyone nervous?
That's definitely part of it, but there are also some concerns that are specific to NXP. For example, they've seen revenue decline in some areas, like industrial applications and the Internet of Things.
Interesting. Earlier we were talking about how strong NXP is in the car industry,
Yeah.
but it sounds like they're having some trouble in other areas.
Yeah, and that brings up the whole issue of diversification. Focusing on car chips is a strength for NXP, but it also makes them vulnerable if that market takes a hit.
So basically, investors might be worried that NXP is putting all their eggs in one basket.
That's a good way to put it.
Are you doing anything to branch out a bit?
They are actually. They've been making some strategic acquisitions to boost their capabilities, especially in software and edge computing.
Acquisitions can be a good way to grow fast and get into new markets, but they can also be risky if they're not done right.
For sure. Integrating a new company and making the deal work as planned, that can be a challenge. So investors are probably watching closely to see how these acquisitions play out.
Makes sense. Okay, so we've got a moderate buy rating from analysts, but there's some hesitation from investors, partly because of the economy, but also because of concerns about NXP's diversification. Is there anything else we should be looking at to gauge market sentiment?
Well, it's always good to keep an eye on major news and events related to NXP. That can give you an idea of how the market is reacting to specific things. Like, for instance, remember that acquisition of Newport Wafer Fab back in 2021, that UK chip maker?
Oh yeah, that deal made headlines.
Yeah.
Because there were concerns about national security.
Exactly, and that kind of thing can definitely make investors nervous.
So it's not just about how the company is doing financially, it's also about how outside events and global stuff might affect them.
Exactly, it's all connected. Which brings us to another important aspect of understanding a company, its ownership structure.
Okay, so time to peek behind the curtain. Who are the big players calling the shots at NXP?
Well, one thing that jumps out right away is the huge role of institutional investors. They own a whopping 94% of NXP's shares.
94%.
Yeah.
That's most of the company.
It is. We're talking about big investment firms, hedge funds, pension funds, the heavy hitters in the financial world.
So these are the pros, the people who really know what they're doing.
Right, and when they're putting that much money into NXP, it suggests they believe in the company's potential.
It's like a vote of confidence.
It is, but of course it's important to remember, just because big institutions are investing doesn't mean it's a guaranteed win for everyone else.
Right. We little guys need to be a little more careful.
Exactly. Do your own research. So is there anything else about NXP's ownership that we should be aware of?
Well, I noticed that insider ownership is pretty low, less than 1%.
Yeah, that's right.
So the people actually running NXP don't have much skin in the game.
That's one way to look at it.
It makes you wonder if they really believe in the company's future.
I understand why you'd say that. But it's not always that simple. Sometimes executives sell stock for personal reasons, like diversifying their investments or estate planning. It doesn't automatically mean they're losing faith in the company.
Okay, so low insider ownership could be a red flag, but it's not necessarily a deal breaker. You just have to look into the reasons behind it.
Right, context is key. All right, so we've talked about market sentiment and ownership structure, but no investment analysis is complete without a good risk assessment. What could go wrong?
Yeah, let's talk about the potential pitfalls. What are the risks involved with investing in NXP?
Well, this is where we pull out our trusty SWOT analysis: strengths, weaknesses, opportunities, and threats. It helps us get a clear picture of what NXP is facing. So let's start with the good stuff. What are NXP's biggest strengths?
Well, we already talked about their dominance in the automotive chip market, and that's only going to get bigger with the rise of electric and self-driving cars.
Exactly. They're in a prime position to ride that wave, and their expertise in secure connections gives them a big advantage as vehicles become more connected and data-driven.
And it's not just cars. They have a diverse product portfolio and customers all over the world, so they're not too reliant on any one market or client.
Good point. And don't forget about their massive patent portfolio. Over 9,000 patents. That's a huge asset.
So a solid foundation, a strong market position, and a ton of intellectual property. Sounds pretty good so far. But of course, every company has weaknesses. What are some of NXP's vulnerabilities?
Well, like we were saying before, their focus on the car industry is both a strength and a weakness. If car sales slump or the shift to electric vehicles stalls, NXP could take a hit.
And they're also facing challenges in other areas, like industrial applications and the Internet of Things.
Right, they haven't been as successful in those markets, so they need to find ways to diversify their revenue streams and reduce their dependence on any one sector.
And then there were those geopolitical risks we talked about earlier.
Like the potential for government interference and trade tensions, that's definitely something to keep in mind.
Okay, so some vulnerabilities to watch out for, but also some serious strengths. What about opportunities? What are some potential growth areas for NXP?
Well, as we've said, the electric and self-driving vehicle market is huge, and NXP is already a leader in that space. Plus, they're making moves into other high-growth areas like edge computing, artificial intelligence, and 5G, all technologies that need advanced semiconductors.
And let's not forget about emerging markets. As countries around the world develop their tech infrastructure, the demand for semiconductors is only going to go up.
Right, NXP is in a good position to capitalize on that global growth.
So lots of opportunities. But what about threats? What could derail NXP's success?
Well, the global economy is always a big factor. A recession or even a slowdown could really hurt demand for their products.
And the competition in the semiconductor industry is fierce.
They're up against some giants like Broadcom and Qualcomm, plus a whole bunch of smaller, more agile competitors.
So they have to keep innovating and stay ahead of the curve.
Exactly. And of course, there are always geopolitical risks. Things like trade wars, political instability, and government regulations. Those can create a lot of uncertainty for any company operating globally.
Right. So we've covered a lot of ground here. We've looked at NXP's business, their financials, market sentiment, ownership structure, and we've even done a SWOT analysis to assess the risks and opportunities. It's been a real deep dive. But the big question remains, is NXP a buy?
That's the million-dollar question. And unfortunately, there's no easy answer. NXP has a lot going for it. A solid foundation, a leading position in a growing market, a commitment to innovation. But they also have some challenges to overcome, like diversifying their revenue streams, dealing with competition, and navigating geopolitical risks.
So it's not a slam dunk either way. What's the main takeaway for our listeners? What should they keep in mind?
I think the biggest takeaway here is that NXP is a company for investors who like to dig a little deeper. You can't just buy and forget about it. You really need to understand the whole semiconductor industry. And what makes NXP tick? You got to know their strengths and weaknesses. And be honest with yourself about how much risk you're comfortable with.
So no jumping in head first.
That's right. This deep dive has given you a good starting point, but you got to stay informed. Keep track of how the company is doing, what's happening in the industry, and any news that might affect their future.
Yeah, like that Newport wafer fab acquisition we talked about. That's a perfect example of how politics can suddenly become a big deal for a company.
Absolutely. That deal created a lot of uncertainty. It showed how governments can get involved and how tricky international business can be in this industry.
It's a good reminder that investing isn't just about the numbers. You have to look at the big picture.
Exactly. You have to understand the forces that are shaping the world and how those forces might impact the companies you're thinking about investing in.
Well said. So for our listeners out there, think of this deep dive as the beginning of your research on NXP. We've got links to all the articles and reports we use in the episode description.
Don't forget, this is just one piece of the puzzle. Do your own homework, talk to a financial advisor if you need to, and make a decision that makes sense for you, based on your own situation and your goals.
Right. Every investor is different. What works for one person might not work for another.
And speaking of learning more, if you enjoy these deep dives into interesting companies, be sure to subscribe to the show.
We'll be back with more insightful analysis to help you make smarter investment decisions.
And for even more investing tips and discussions, check out the Stock Analytics AI YouTube channel.
We're all about giving investors the information they need to make informed choices about their money.
So that wraps up our deep dive into NXP Semiconductors. We hope you found it valuable.
Remember, the world of investing is always changing. So stay curious, stay informed, and, as always, happy investing.
And one last thing. Just a reminder that all the information in this deep dive is for informational purposes only. It's not financial advice. Investing always carries risk. So do your own research and talk to a qualified professional before making any decisions.